And we're live. How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This year, daily update on gold versus the US dollar. As we can see, we got this leg lower after running the IPTA 20-day low. Still expecting some type of retracement, right? Maybe back up to this last up close candle, maybe into this SIBI as well, right? Or some type of retracement. But as we stand, the sentiment is bearish on gold. Dollar is clearly bullish. And we can see GU, AU, EU, and NU selling off. Let's just mark this off here. So we got that. And then we also have this order block. We can even use the low of that candle. And we got a swing low, pretty much 1, 2, 3, and speed through that swing low. So for those that know the entry technique that we use on a lower time frame, this is it on a fractal, right? On the daily chart. The same thing we use to enter during the kill zones on the 1 minute time frame. That's what's happening here. And you can actually see this entry in today's New York session. So if you look at Wednesday's daily candle, look at the New York session, and you'll see after that news event, we got a short above the New York opening price, so above 7 a.m. and IPTA true day open, midnight opening price. We'll talk about that in a separate video. But we see prices still breaking down. And if we had to go short and investigate each one of these days, they all probably have similar characteristics. We can see at some point it runs up and then it drops and closes lower. At some point it opens, runs up, drops, closes lower. And the same thing repeats over and over and over again. So when you have that in mind, you could start tackling days objectively. You don't have to go in here randomly because your speculation is lower price action. And how is lower price action or selling delivered to the trader? Often there's some type of rally above, right? Getting traders induced to the wrong side, right? You get that Judas swing up and then they faded on traders, whether that's going to happen in London or New York or even possibly that Asian session that night. Let's take a look at the DXY. Bullish. Again, running away from that down close candle. And if we take a look at like GU, because like I said, this month we were going to do gold and another pair. You see it's selling off too, which is not surprising. We're selling off and we'll continue to go lower. You have this huge SIBI here. Volume imbalance up here. Then we also have what? This last up close candle before this sell off. Again, swing low. 1, 2, 3. There's a swing low formation that is through that swing low, that fair value gap. Very interesting to see that, right? The daily chart is showing the same fractal entry idea that we use on the 1 minute chart. Take a look at New Zealand dollar versus the US dollar. Selling off. Again, last up close candle. Look how it's breaking down. And those bearish trends I like to signify, those up candles are going to be counter trend candles. Those are the days that you are looking for to take an opportunity after it's finished forming. Just take a look. I know it's hindsight. But if you take a look at this leg here and just look at after every up close candle, more than likely there was a selling opportunity that presented itself. Now, I'm not telling you that you're going to get into this market and you're going to automatically sell and you're going to understand where the trend is going. You know, there's going to be times where you're following the trend and you're off pace with it. You're off track with it. But eventually, right, as a trader, you will find that trend. Now, we have methods on how to find that trend on the channel. If you go through the playlist, you'll see daily bias recognition, right? That playlist, it's a 3-part series. Each episode shows you how to find a daily bias on the daily chart and how to actually enter the market, right? Whether that's an intraday or even a swing trading position. We show that in that video. Let's take a look at gold one more time. Again, if gold is selling, all the other majors are selling, the UCAD is rallying. UJ is rallying. The other yen crosses like GJ, NJ, CADJ, Swiss J, Euro J, whatever, Swiss J, whatever you want to look, all the N crosses, not really moving as fast as UJ in particular. Like I said, in recent time, what happened? New U.S. president, right? New regime, trying to see if money's going to flow right back into the dollar. The economy so far is doing well. The Feds just recently cut rates. So are other central banks as well around the world. So remember, fiat currency is based on yields. People are looking to park their money where they can get a great return on. So if these other central banks are cutting more than the Feds or lower than the Feds, the dollar is going to be, king still. They're going to be sought after more than other fiat currencies. Right now, I currently would continue playing the shorts. You're going to be looking for the next swing low or old high. So like I said, we have that old 60-day high right here. That's that old 60-day high or August's high pretty much, right? That's August's high. I want to see it retest that. Again, we use IPTA just to find significant price points in the marketplace where we can find pivotal moments, areas where it can break and give us a retest and continuation, or areas where we can see a break and then change in trend, get that false break and price rallies or price distributes after breaking a high or rallies after breaking a low. I would continue playing the shorts. I would be cautious though. Like I said, you could get a strong reversal, retracement, and potentially a continuation lower. So be on the guard of that. Look to trade on ideal trading days and look to trade during the days where the news events are occurring during the kill zones. It's going to be your best friend. The news is the excuse to move price action fastly. It's only going to persuade a handful of traders on the wrong side, or it's going to grant a lot of traders the chance to make a lot of money, pretty much, or win their trades. So for every winner, there's a loser. That's the game that we play. But still, the speculation was that we're going to get a lower gold. Again, if we go back to those previous episodes, just take a look. Go back to the episodes. They're not that long. They're short. This swing low being broken, right? That to me is a change in momentum. And if I want to see a continuation lower, I would like to see a lower swing high. And we actually did get the lower swing high. If we take a look at this candle here, it's higher than the candle on the left here and higher than the candle on the right here. It's a higher high. This is your lower swing high. Right here is where the market makers had their last input on going short. And this up here would be the higher swing high. So you can see in that daily bias recognition series, if you go and watch that, I'm telling you, watch that playlist. Exactly what I'm showing you here on gold is exactly what I describe in that daily bias recognition. You got a change in delivery. Price is breaking a structural point, a swing low on the daily chart. Significant. It's a very significant key point because the time frame that we're trading on isn't like a 1 minute or a seconds chart. No, this is a daily chart. Entire data of day comprised in this one candle, which is one bar. So we got this higher, and we got this lower. What is this? Lower swing high. And now we got what up here? We got a higher swing high. So if you take a look at that video, I'm telling you, this exactly is what happened. Higher swing high. There we go. So we'll see if we can catch another opportunity of a retracement and get a lower swing high to sell off, or this thing continues to melt going into December. So hopefully you found this insightful. Peace.